Hello guys, welcome to yet another video from Finance Home. In this video, I will be giving you a full tutorial on real estate investing. But just before that, make sure you press the like button and subscribe if you are new to the channel. With that said, let's proceed to our main topic of discussion. Earning money from real estate is among the oldest recorded financial activities. Since the 1960s, real estate investing has proven to be the number one wealth builder. This proven investment strategy has been used for generations to diversify real estate portfolios, increase monthly cash flow, retire more easily and comfortably, and reach financial goals. Investing in real estate is certainly one of the smartest money moves you can make. Now, let me give you a full breakdown of real estate investing. Let's start with the definition of real estate. A real estate is a property consisting of land and the buildings on it, along with its natural resources such as crops, minerals, or water. There are basically four types of real estate: residential real estate, industrial real estate, commercial real estate, and land. Residential real estate includes the newly constructed and resale homes. The most common among residential real estate is single-family homes. Others include townhouses, duplexes, triple-deckers, multi-generational and vacational homes. Number 2. Industrial real estate. This includes manufacturing buildings and property, as well as stores and warehouses. The buildings can be used for research, production, storage, and distribution of goods. Commercial real estate includes shops, shopping centers, malls, schools, hospitals, hotels, and offices. Land includes vacant land, working farms, and ranches. So all these are potential categories of real estate where you can consider investing. That is by buying, producing, and selling real estate. In many countries across the world, real estate is a major driver of economic growth. If you are an investor in real estate, you can hire real estate agents who assist businesses and investors to buy and sell all four types of properties. Each real estate agent can be a specialist that focuses on one of the types. There are also sellers agents who help find buyers of real estate through either listing service or their professional contacts. They price your property or spruce up your property so that it will look its best to customers. They also help in negotiations with the buyer, helping you to get the best deal at the best price possible. Buyer's agent provides similar services, but this time for the buyer. They know the local market. That means they can find a property that meets your most important criteria. They also negotiate for the buyer, pointing out reasons why the seller should accept a lower price. They also help with legalities of the process, including inspection and financing. So basically, everyone who sells or buys a house engages in real estate investing. There are many ways to that. First, you can flip a house. That's where you buy a house to improve it and then sell it. Or you can own several homes and rent them out. You can also rent out vacation homes or motels. You can invest in housing without buying a home. You can buy stocks of home builders and their stock prices rise and fall with the housing market. A third way to make money through real estate investing is by earning interest on loans. In this situation, you invest your money and a real estate developer takes care of the nuts and bolts of the operation. For instance, let's say a real estate developer wants to purchase a multi-family home for $500,000. Then you loan him some or all of the $500,000 he needs. He will then pay you back a certain amount each month with interest. It's like you are the bank lending them money. Now that we know the types of real estate investments, it's time to figure out how to get started in real estate investing. The first step here is to figure out if you want to be an active or passive investor. Active investors take an active role in their investment, while passive investors supply the money and let others do the work for them. Being an active real estate investor is a big category, so let me break it down for you guys. As an active investor, you might be the one physically putting new tiles in a house you are trying to flip, or you may just set up contractors to do the work. Either way, you are taking your time to make sure that the job gets done. An active real estate investor might also do the legalities of getting renters into the apartment or scheduling needed repairs. As a passive investor, you hire others to do these tasks for you. This can be as simple as hiring a property management company to take care of getting rents and scheduling repairs for you. People who are already very busy or don't want to worry about all responsibilities of an active real estate investor may lack the freedom that passive real estate brings. Both types of real estate investing has their own pros and cons. For example, active investors benefit from high profit, increased industry and local market knowledge, while passive investors benefit from lack of double taxation and free time. Now, let's look at online real estate investing. If you don't want to worry about repairs or finding renters, then online real estate investing is for you. Thanks to the internet, there are several ways to be a real estate investor without ever leaving your home. There are companies that handle your transaction for you. These companies don't own houses, so they are only interested in negotiating deals that will work best for their clients. Going through an all-in-one investment real estate company is a great investment option for those who don't want to deal with the stress of even finding a property management company. The next factor to determine when starting a real estate business is how much capital you have. There are three main financing options for your real estate business. Get a loan from a bank, find angel or outside investors, or start with your own personal savings. If you plan on going through the bank, then your credit score is significant. The higher your score, the lower the risk your bank will consider you to be. A higher credit score will land you a favorable interest rate on your loan. Now, let's look at the pros and cons of real estate investing. Advantages of real estate investing includes less risk and volatility than stock market, good source of cash flow, lots of tax deductions, long-term returns for your properties because over time, most properties will appreciate in value. Disadvantages of real estate investing include potential returns of real estate are not as high as the stock market. Also, real estate investment can be cash heavy. There is also poor liquidity because properties are not liquid investments. Also, managing tenants and building maintenance is a challenge. So, this is a short tutorial on how to start a successful real estate investing. For any comments, feedbacks or questions, let me know in the comment section below. And don't forget to press the like button and subscribe for more financial videos like this. Thanks for watching.